Hello and welcome to BTTV. Reflecting quite the opposite traits, the stock market, which crashed during the first wave of the COVID, maintained its high levels. In fact, kept hitting new highs while the nation was going through a worse second wave of the pandemic. What will happen to the stock market if the third wave comes? We have with us Mr. Sunil Subramaniam, Managing Director of Sundaram Asset Management Company, to unfold the expected movement of the stock markets going ahead. Let's hear him out.
So I think that the stock markets are in a state of, I would say, liquidity supported levels, right? So the availability of ample liquidity as the world's response to the COVID crisis, I think has found its way into the world stock markets, and the Indian stock market is the beneficiary of that. But liquidity goes wherever there is good news. So I think what is to got to be married here is while there is liquidity available, you see all emerging countries are not getting the amount of liquidity that India is getting. So it is the India's good outlook as believed by the foreigners, which is buoyed up the stock market. So I think the stock market is a beneficiary of both events, that is liquidity availability and long-term outlook being good for India as a country. So that is what the market is reflecting today, stock market.
Okay, and there are talks about the third wave of COVID. So if that happens, where do you see stock markets moving ahead?
So I think that one thing is that the stock markets are generally known to be what you call a lead indicator of the future, right? So when there is liquidity available, the markets try to read into the future. So if you see the behavior of the market in the first wave and the second wave, right? There was immediate correction, but soon there was an acceptance of reality and a going forward. So I think the third wave benefits from three things. First is that we know there's a third wave coming. So I think preparedness for the future is half the job done. So to the extent that it's not a surprise to the market. Markets don't like negative surprises. So I think third wave is no longer a surprise. We know it's on the way. And so everybody prepares for it, including the market. The second aspect of it is that the preparedness is not just in terms of what can happen to the economy, but the preparedness is also seen from the government's front in terms of the fact that after the first wave, they celebrated victory and didn't realize that a second wave could happen. This time, they know that a third wave is going to come, so they are not complacent the way they were after the first wave. So I think the vaccination, government stopping the export of vaccines, government allowing the import of, a lot of Sputnik, Pfizer. So the government's approach to this shows a level of preparedness, which gives confidence to the market that vaccines, what do they achieve? They don't prevent the third wave. They help less people get hospitalized, less people having, dying due to the symptom, which itself is a great relief. So it's the second aspect. The third aspect is user industries and people are also got used to the first wave and the second wave on how it disrupts life. So the level of preparedness of every economic participant is also that much better, right? So I think that on top of this, if you look at it within the next 3 to 4 months, right? If you go by the Fed, whatever the meeting disclosed, they're only talking about 2023 that they are going to ease the liquidity. So the near term, the market has no concern that suddenly the liquidity may go away. So all in all, I think it augurs well for the fact that even if a third wave comes, it is a known event, right? So I think to that extent, I expect that the market will take it in its stride. And the future movement of the market will depend on how quickly the economy is bouncing back after the second wave, where they may say that the third wave may cause a few setbacks, but the long-term growth path will be clearly laid out. So I think that the markets should catch new highs if the economic news continues to be on a good wicket.